This is your LMAX exchange technical update for Wednesday, November 8th, 2017. Euro dollar. So the euro had been consolidating for several days after breaking down below the neckline of a major head and shoulders top before finally taking out the consolidation low on Tuesday, which does open the door for the next downside extension potentially towards that 112.30 pattern objective. At the same time, the market could see bounces over the coming sessions, but we would need to see a break back above the recent consolidation high that had been in place at 116.90 to take the immediate pressure off the downside. Until then, the market is focused on the downside, and we could be headed down towards the next key support on a psychological basis, which comes in at 115, guarding against that pattern objective all the way down at 112.30. Sterling dollar. So cable has been confined to a consolidation over the past several days, a choppy consolidation in that the market confined roughly between 130.25 and 133.40 above, and so we need to see a break on either end for clearer directional insight. If, however, we do break below 30.27, additional setbacks should be limited to the 127 area, with the market putting in a much more significant bullish breakout above 127.75 in 2017 to suggest that we're seeing the formation of a longer term bottom. But if we break above 133.40, it would lend itself to a continuation of what is now looking like the start to a more significant uptrend, putting the focus on a retest and break of the 2017 high, which comes in at 136.60 further up. Above there would expose a direct move to 140. Dollar yen. So dollar yen continues to show signs of maybe stalling out up here. The market had been trading in a range for most of 2017, and so rallies up into the 114 to 115 area should be well capped ahead of a resumption of this trend. If the trend being the range trade. If the market breaks back down below some support which comes in at 112.95, it would strengthen this outlook and accelerate declines down towards next key support, which comes in around 111.65. So again, look for the market to potentially be in the process of stalling out up here for a resumption of the range trade, with only a break back above the 115.60 area to compromise this outlook. Euro Swiss. So Euro Swiss continues to extend in 2017, recently trading up to a high of 117.13 ahead of this latest minor pullback. But overall, the pressure does remain on the top side following significant breaks of 110 and 112 in 2017. And this exposes eventually a push all the way back towards what had been major support, if we remember, going back to January 2015 by that 120 floor. Ultimately, only back below 112 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie continues to trade with a bearish tone. The market has been consolidating this latest round of declines, but there is risk now for a deeper drop towards the next key measured move extension, which comes in at 75.50. At this point, only back above some recent resistance at 77.30 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD has been recovering over the past several weeks, and the market could be looking to extend this recovery, putting in a higher low somewhere ideally ahead of 126 in favor of a continuation of gains up towards the psychological barrier at 130. Look for any setbacks here to be very well supported again into the 126 area, with only a break back below 124 to compromise this recovery outlook for dollar CAD. Kiwi dollar. The New Zealand dollar has been under intense pressure over the past several weeks. Remember, the market did put in a plus 2-year high back in the month of July at 75.58, but since then it's been straight down for the New Zealand dollar, with the market recently matching that previous 2017 low from May at 68.18. Any rally should now be very well capped, ideally ahead of 71, with only a break back above 72 to compromise or delay this bearish outlook. And the focus now is on an eventual break below 68.18, taking us down to the next extension in the 65 area. SPX 500. The S&P 500 has pushed up to yet another record high in Tuesday trade, with the market possibly looking to continue this parabolic move that we've seen, certainly on the weekly and monthly charts. There is every need to see a correction, but the market would need to break back below 25.44. That's a low going back to the 25th of October at a minimum to take the immediate pressure off the top side. Gold. So gold has been very well supported over the past several months, with the market gradually putting in what appears to be some higher lows and higher highs. Look for the market now to be supported, ideally ahead of this 1260 area, ahead of the next major upside extension back towards and through the 2017 high at 1357, and then exposing a break of the 2016 peak at 1375 further up.